Good evening. This is the video newsletter for Buy Sell Short for Tuesday, October 4th. Another really interesting day in that thing we call the crooked U.S. stock market. Just crazy action. If you are not watching, same old today. We had more European debt crap. This time, there's articles floating around that Greece only has a few weeks left before they run out of cash. The Europeans have pushed off till mid-November when they're actually going to fund them, if they're going to fund them, the next, tranche of their debt. And European banks just cratered overnight. And that spread to the U.S. markets, and we had the market down 200 plus shortly after the open. But we are starting off today with the SMH chart, and the reason being, even though we had the end of the world all the way around the world, financial crisis, markets down huge, the SMH was barely down. Actually, when we had the market down 200 plus, the SMH was flat on the day, and this is why I always use the SMH as my market indicator. Going back 10 plus years, the SMH it's uncanny how accurately it can predict tops and bottoms in the market. And we may very well have seen a possible near-term bottom in the market just based off the action we saw in the SMH today. Now, the SMH chart looks a little bit weird here. I've ignored this candle totally on the chart, and the reason being, if you weren't familiar, the SMH issued a $1.50 per share dividend last night, so today it started trading ex-dividend. So it closed at 27.60 yesterday, so today it started trading at 26.10. You get paid that $1.50 per share next week. But as you can see, the last significant bottom we had was back there right the first week of September, and we had almost an identical candle on the SMH, and we saw that again today. We actually get a better idea if we check out the chart of the SOX. Same thing. As you can see, this is a bullish engulfing candle on the SOX, and I am a firm believer that where the semiconductor stocks go, the rest of the market follows shortly thereafter. And the SMH, just like it did back in early September, led us out of the doldrums today, and really, especially going into that last 30 minutes. I mean, going into the last 30 minutes, the market was down 210 points. We closed up 150 points. That was a 360-point rally in 30 minutes. The reason for that? Some vague news out of Europe. The Financial Times reporting that the Europeans are looking at recapitalizing their banks. Tomorrow this could be spun entirely different, but this is the market environment we live in. And unfortunately, I would have preferred, let's look at the Dow daily chart. Here we are yet again. We finally got a breakdown of this trading range that we've been in for the last 3 months almost now. Looked like we were finally going to get some serious capitulation in this market. And then what do? Rally us with 30 minutes left to go and close us back up on the channel. Damn it. That's all I got to say. We were on course for seeing 10K or possibly 9,600 on this market. And like I was saying in the chat room all morning, I am drooling over the prices in this market right now. Small caps, mid caps have just been decimated. I got goosebumps looking at all these beaten down plays we have out there. But I'd really like to see just one more capitulation, just to feel a little bit comfortable starting to add some stuff. Now that we had this big bounce today, how do I call any stocks now tonight? We've got our SMH core, but really, we saw some stocks. ACLS, we jumped into it in the chat room at $1.03. Going into the last 2 minutes of the day, they popped at 7%. We saw it across the board. HILL, MOVE. This one, they actually got it as low as $1.17 going into the last hour, and they closed it up at $1.50. That's a 30% intraday move. Sirius, SIRI. They had this one at $1.27, ran it all the way up to $1.50 plus. Crazy action in the market right now. Even though we briefly broke into bear market territory today, these crazy up and down moves we're seeing are, just typical of bear markets. Huge up, huge down. The huge up happened after everyone's been washed out. Breakdown in a stock or in the indice, they wash everyone else, and then whoop, it's all the way back where it was with no one long it. And that's kind of the market we're in right now. 15-minute chart, you can see we made it all the way back to that channel. We've been ignoring these big, swift, European-inspired drops on the market. Where do we get a warm and fuzzy? What's funny is in the chat room today, I was talking about how we wanted this rebound to happen in the market. And what I would prefer are small daily gains. 30, 50, maybe 75-point rallies, over the course of a few days would get me comfortable to start going long stocks. 350-point moves in 30 minutes, yeah, I'm not going to be chasing stuff in that environment. I'm going to continue to scalp. I'm going to start buying things, but I'm not going to get that warm and fuzzy I want to get to go long overnight. So yet again, the robots, threw a spanner in the works. Very nice action, though, and, just to beat a dead horse again, I like the action we had in the SMH today. Very, very bullish, in my opinion, for the near term. And I would actually say any dips from now on in the SMH, I would look to accumulate a medium-term position on the SMH. This would be a take-home at night position. That's how strongly I feel about it on now. And any subsequent dips and European crap that enters the market, we can add to that position and then make the position large enough where you can flip half out on big up days like today. As for stock plays, the pop scan, my momentum scanner hit a low of 4 yesterday. I think we closed today at 10. So even though we had this huge move up, momentum's not come back in. But knowing the scanner, if we're anyway green tomorrow, we're going to have plays left and right. But again, they're going to be intraday plays. Small in-out gains. We're not looking to invest yet. Still a lot of stocks beaten up. And just one other thing to throw out there. Oil prices today, price of crude oil closed under $76, the lowest point since September of 2010. Do you remember what happened in September 2010? That's where this last rally that topped out in April of this year began last year. It was in September. So we got some, positive correlation there. And a lot of those zero hedge bears today were talking about the correlation between the pricing on the Dow and the VIX yesterday and what it portended for the next 2 days. Those guys got blown out of the water in the last hour, and that's just how a market like this is like. Best place to be, high cash, trade these intraday moves, but this is a market that is death to both longs and shorts who hold for any sort of period of time. But again, nice action today. We're going to be paying really close attention to a lot of the plays we jumped into today, like ACLS, PSUN, FCEL, MOVE, Sirius, etc., to see what happens tomorrow on any sort of pullback in the market. Let's see if we can confirm a new bottom. But remember what I said a few days ago, if a stock had not made new lows, stay the hell away. All these stocks have made new lows and then now are trying to bounce, and that is really, really positive for the near term. And again, all I got to say, guys, is be really, really patient. We've been through many markets like this over the last 10 plus years. They all begin, act, and end the exact same ways, and this market is no different than all the other shitty markets we've been through. Good times are coming. We've got a lot of cheap plays out there right now, and when this ridiculous stupidity with Europe starts to abate, and it will, the market's going to get sick and tired of actually talking about Europe really, really soon. You'll start to see the focus come back onto the U.S. economy, and then all these small and mid-cap stocks that got dumped under the false pretense of a recession will come roaring back. So that's it for the video. Any questions, feel free to send me an email. Otherwise, see you guys in the chat room tomorrow. Good night.